Hello and welcome to Commodity Champions. And the Gem and Jewellery Export Promotion Council held the 4th edition of the India Gold and Jewellery Summit in New Delhi. Well, the summit witnessed several discussions on India's gold jewellery ecosystem, infrastructure, policies, innovation and a lot more. On the sidelines, I caught up with Somasundaram PR, Managing Director, World Gold Council, and Vipul Shah, who's Chairman at the Gem and Jewellery Export Promotion Council. They spoke to me about the outlook on India's gold industry, prices and much more.
We have had fantastic successes. As I said, 10 years ago, you would not have dreamt of having mandatory hallmarking, IIBX, good delivery standard. We've got lots of stuff now. And GJPZ is bringing out a big jewelry park in Mumbai. We need to pull all this together and say, what is India going to mean to the global trade? India's demand is going to grow substantially. We've got to prepare for that. So that is where I said we need to now pull everything, including our digital force, and see how do we now have the next 10 years, what are the key things that we are going to do. A lot of people are going for IPOs now from the industry, which means public money is now going into this, not just for buying gold, even for buying the shares. So we need to be a lot more cautious and long term. That's what I meant.
Yeah, absolutely. So while there were very limited resources, or rather ways to buy gold, just physical or jewelry used to be one part of it. But with the way we have sovereign gold bonds and now the gold shares as well, the market just seems to be expanding right now. And there is something for everybody, would you say?
Yes, there is, absolutely. And, as we say, now, do you buy gold or do you buy shares in some of these gold companies? Now, you got an option there too. So you have to have better governance. The image of the industry has to go up. And we have digital force, which I think still hasn't touched gold in a big way. So that's very important for us.
So I would know, 10 years ago, if you spoke about on how would you rank the gold industry or the jewelry industry on a 1 to 10 in sense of credibility, financing or transparency, I knew the numbers was really low. But has it improved in last 1 decade?
It has definitely, but it still has its challenges. If you ask a banker today, he is still very cagey about discussing, on gold. And largely, RBI has been very conservative about this, rightly so. We still haven't changed quite a bit, which is why we are talking about the self-regulatory organization improving the image of this industry. The industry's image definitely has to match its potential. It is absolutely not there. The potential is somewhere way above, the image is somewhere way below. I think that has to be bridged.
Oh, well, absolutely. And, Vipul, every time budget is around the corner, this is a conversation that we start to have on whether or not the finance minister is looking at jewelry as a sector. I was talking to some industry representatives and they were like, it's okay if she doesn't even look at us. It's okay if she totally misses us. At least nothing negative should come, even if no positives come here. How are you looking at this budget?
We are not having high expectations on this budget. Let me be very clear, because it's going to be an interim budget and it's going to be a vote on account budget. But yes, we are in talks with our Ministry of Commerce, where we are reporting to, and they said that if there is any specific burning issue as such, they can come out with a notification as such. And as far as our demands, as for usual, we have asked for reduction on the gold duty. We have asked from 15 to we have asked for 5%. We have asked for relaxation of sales from special notified zone for the mining companies who are participating in the auction, so that can be also more helpful to the industry as such. So, and the equalization duty also, which we had been also talking to the finance minister also, the 2% equalization, because there is no duty on rough diamonds. So I'm sure these are our pressing needs for the industry, and I'm sure the government will look into it.
We will also, there always is this conversation about how competitive are we as compared to the international markets, whether it's about imports, which you just mentioned, the duties should go down. The other is about exporting as well. How do you look at that market? How competitive are we in sense of importing and then exporting?
We are very much competitive as far as our exports are concerned, and we are very much innovative. As rightly said, that if you see, India has come up as a very strong designing hub. People are looking into India. The business over here is growing as such. Yes, there are challenges on the export front, and the two of the major markets were the US and the China, because of the inflation slowdown. So that is where you see a little bit dip in our export industry. But I'm sure that with China opening up after the New Year, things should start moving in the right direction.
And then there are a lot of trade agreements as well that are in place right now. How has that helped India as an industry?
Yeah, that's really helped a lot, and it's all thanks to our Ministry of Commerce, Mr. Piyush Goyal ji. The FTAs which he has signed, the ACTA with the Australia, and the ongoing this FTA is coming with UK and EU. So I'm sure with these FTAs, this is helping to boost our gems and jewelry exports a lot.
So how is the Indian demand looking to you right now? Because there have been lots of numbers floating around, and while the year is ended, are you giving us a final number on what we saw in the previous year, and how are you looking at the demand now going forward?
We'll come out the figures in a week's time, but yeah, it is a soft demand in terms of quantity. The value has obviously gone up, there is no doubt about it, but in terms of the quantity, it is soft. And it always happens because the prices are lifetime high. And this is where I have made the point this morning as well, that India now must be prepared for a massive jump in the demand, because people just get used to the 60,000, 65,000. Gold is still very, very relevant to us. And suddenly you will find that, from 700, it just jumps to 900. And you shouldn't assume and panic. And that's where we've got to be prepared and play with the government on a proper policy. It doesn't affect the listed companies as well, because anything you do now, they're going to affect even the stock market. And some of our portfolios might be affected, not just through gold, but through the shares. So we are going to see a jump. We may see that in 2024 or maybe the year after. Okay. But we're going to see a big jump.
So, that's a question that I want to ask both of you. With the way the industry really seems to be changing now, and with the way we have IPOs coming out of jewelry sector as never before, and so many of them in the pipeline, how are you looking at this industry growing, wanting public money, wanting to be in the mainstream like that?
Well, actually, we have handled public money in the sense massive amount of investments are in gold. So why not in their shares? But they have to show the governance, which is good. When people take up, they are governed by very stringent standards of governance. And what I think is now it must be aspirational for every jewelry company. You mean something, your brand means something, test it out in the stock market and, put in good governance around it.
Vipul, what's your sense? I hear a lot of companies from Jaipur are going to be listed, and many of them are looking like that.
So that's great news for India, and a lot of investments coming into India, and I'm glad that gem and jewelry sector is also being recognized, that confidence level has come back in the industry, and I'm really very happy about it. And the way we've seen today recently in the news, which I've seen, that India has become as the market cap as the fourth largest, just over to Hong Kong, and it just took on the fourth position. So the way we are going ahead, I think everybody's eyes on India, and it's one of the largest economy, and nobody can look beyond. And I'm sure that with this, gem and jewelry would be much benefited from this kind of IPOs and people interested in it.
What's your sense on the diamond prices going forward? Last year, we did see some correction. People did make use of that, but is the demand back? Are the prices also consolidating?
Yes, the prices are consolidating. That's the good news, that yes, the prices are consolidating, and from here we are seeing the supplies have been constrained, and we'll see the market start moving up now.
So my final question, where are the gold prices going?
Well, I won't be able to answer that. But yes, look, it's now a lifetime high. Interest rates are high. Stock market is doing well. On that, you're seeing a high gold price. Now, imagine what happens when the interest rate cuts happen. There may be immediate volatility, but all experts believe that it is headed strongly upwards. But I can't give you a target. We have always benefited.
But you're bullish.
I'm bullish. Yes.
That's all I need to know then. All right, so you can buy gold and you can buy gold shares, and the diamond prices seem to be coming back as well, is the sense we're getting in from the market. But I also caught up with Vikas Singh of MMTC-PAMP, which refines gold and silver. I asked him about his outlook on the demand for gold in India.
We believe from a supply point of view, there are a couple of opportunities which can be tapped into, because India is at a sweet spot. The world wants to be a part of India. There's a lot of good news, good buzz about India for the right reasons. And similarly, in this sector, if you were to speak about the mines globally, they would definitely wish to be a part of the entire Indian market. Also, if you're a part of precious metals, you cannot ignore India. You need to be in India. So that goes without saying. It's like we say, gold and silver have a divine relationship in India. There are two areas which really come to my mind. One is, for us to be able to bring gold in, we need the flexibility to be able to move it out should there be extreme volatility. Post-COVID, the extent of volatility has been unprecedented. And for this reason, you bring in metal, the costs related to it, because the nature of the commodity is such that the value is very high, the cost can be forbidding. They can be actually backbreaking. So one needs to be very careful about how much you bring in. You should be able to move it quickly, 7-10 days, max 14 days, even that's too much. And then, hopefully ask for the next lot of, doré coming in, which is what applies in our case. However, should he get stuck, then that's a very different conversation. So in this context, our submission is to be allowed 24-carat export. If that happens, then it's so easy to bring it in, send it out. India's at a discount, send it to a market which is at a premium. India always conforms to the highest of standards. We are LBMA, there's craftsmanship, you name it. So we have Indian themes. The Indian diaspora, they look forward to our product. So catering to the Indian diaspora across the world, another big opportunity. So this entire piece can actually fit in very well in terms of catering to the local market and also at the same time addressing the Make in India objective, the vision that our Honorable Prime Minister has. And that is something which fits in very well again. The second is the banks per se are not allowed to buy from the refiners in India. So there again, that's a bit of an irony. So if you're saying Make in India, on the one side, the refiners are on a low capacity utilization. On the other side, the banks are importing at a higher cost because freight, insurance, etc. goes up, and they're not being able to buy from us. So if we are allowed to be able to supply to the banks, then, all the points that have been discussed, should it be, minimum 5 kgs, 1 kg, 100 grams, 50 grams, you name it, we can make it and we can give it. So the third is GMS. Once again, partnership with banks. The 25,000 tons out there. Can we bring it back into circulation? The so-called financialization of gold. I think these are three big thoughts that I have, Manisha. And we are in discussion with the government. We are very hopeful. A lot of big steps have been taken to really open up possibilities. We are hopeful that these two should come through.
But would this be a year that it comes through? Because this is a year that the government is very busy, and this perhaps is not on real high priority there.
That's tough for me to say. I'm hoping that the government responds. I know there's a lot happening out there. Plus, you have the elections coming in, so the budget is a vote to account. But even if it doesn't come in now and comes in a few months later, I don't think it should really matter. What matters really is to be able to cater to this demand locally. Capacity utilization goes up on one side, costs go down on the other. The demand-supply, imbalance gets met as best as possible. I think it's a win-win for everyone.
So when you look at the Indian market, would you say that it's maturing? Because there are so many financial products available right now. So whether it's about investment, buying jewelry, buying smart jewelry as well, do you think the Indian consumer has come of age?
Well, I would say that the Indian consumer definitely has come of age, but I won't say it's maturing. It's got a long way to go. Affluence is going up. Employability is definitely up. I think all the metrics are looking good. There is a very conscious choice in terms of becoming a part of the formal economy. So, that entire, the funds which are going elsewhere are now coming in a more formal basis, whether it is physical gold, whether it's ETFs, whether it is, any other form of investment. I think we have a long way to go. It should be good.
How are you reading the sales within the Indian markets itself? Because while we are looking at the value increasing, the volume hasn't really done the job.
Yeah, so we, from our point of view, from an MMTC-PAMP point of view, we believe there is an opportunity in terms of deeper presence in the markets. We are very clear in terms of the quality and the purity that we bring, so we do sell at a premium. So from that point of view, we may not be addressing all segments, but we are very buoyant. So we are investing additional capex. We're trying to increase capacity significantly. We're bringing in even, once again, the latest of technology. So there's enough work underway to address the Indian demand. Hoping if exports get allowed, then it's a global demand. And again, then possibilities are so different, right? You take share away from other people across the world.
So while of course it's a vote of account as a budget, but every sector that we have been speaking to do have their wish list ready. So is there anything as a refiner that you believe that should work in sense of policy or should come within the budget?
I think if these three areas that I've touched upon, if they come through, Manisha, that'll be a big one for us. For the country per se, the contribution to the exchequer will be humongous. You'll be reducing imports, you'll be boosting exports, you'll be increasing employment, you'll be increasing capacity utilization. I think as an industry, as a country, we should do much better.
I also want to ask you about the demand growth that India is seeing right now. Do you see that come back post-COVID now? Do you see markets looking at better, stronger growth?
I think the beauty with India is, almost about 70 to 75% of the demand is marriage-driven. So, there are 10 million marriages a year, and you talk about roughly about 50 grams of gold per marriage, that's 500 tons. That's not going anywhere. So, and then of course there's consumption demand and occasion demand and so on and so forth. So, and if you see historically whether gold was at 30,000 rupees or now at 62,000 rupees, the demand has stayed consistent. I think the question is how do we manage this demand in a manner that it does not put pressure on the exchequer, and at the same time you're able to reap the benefit of that from a larger economy point of view. So I think we should be fine.
Well, that is Vikas Singh telling us, among other things, that they have suggested to the government for allowing 24-carat gold of exports, and that the banks should be allowed to buy gold from Indian refiners. I mean, that clearly could be path-changing and could lead the demand much on the higher side. But with that, it's time for a short break. But don't go anywhere. We'll be back in a moment with the newscast.